Everybody, I'm Heather Riley from the High School Counseling Department, and I want to thank you so much for coming to our annual financial aid. As a parent, I know that thinking about paying for college and thinking about filling out financial aid forms can feel very intimidating. And as a counselor, I want to make sure that we're giving you all of the resources you can need to help support you in that process. And we have a wonderful resource here with us tonight. Dan Robinson is a financial aid professional with over 35 years of experience in the student aid field. He's currently the campus director of financial aid at Pace University's Pleasantville campus, where he has been for the last 22 years. Prior to Pace, he worked at Adelphi University and Iona College. Thanks so much for joining us, Dan.
Thank you very much. Every time I hear it, I just feel older and older every year. So, good evening, everybody. Thanks for coming out. I know it's a busy time of year for everybody. So, I'm going to go through the presentation. Some parts rather quickly, skip over a few things, but get all the important information covered. So, here's kind of what we're going to discuss tonight. Some of the important terms, such as cost of attendance, SAI, what is financial need, types of aid, where the aid comes from, the forms you're going to fill out, and the difference between special and unusual circumstances. So as you start the college search and you're in the process of it, and those parents maybe who aren't parents of seniors, you start to look now, you're going to see sticker prices that are going to scare you. $40,000, $50,000, $60,000, $70,000, $80,000 to attend college. So what you really want to look at is the direct costs, or the direct expenses, which is the tuition and fees, housing and food. For those old timers, that used to be called room and board. So it's housing and food now. That is what the college is going to charge you for your child to attend. Those 4 items. The rest of the list items here that are part of the overall cost of attendance are costs you should expect to incur while your child's in college. Books, obviously, materials, equipment. You have to get to and from college, and of course, the usual personal expenses that you're paying for now anyway. Next term is the Student Aid Index. This is a new term that just started this year. Term replaces something that was called the Expected Family Contribution, or EFC, on the old FAFSA form. It's been changed to the SAI. It uses financial data from the student and parent on the federal government form called the FAFSA to come up with this figure. And schools use this to determine what is the student's demonstrated financial need. Simple math problems. Cost of attendance minus SAI equals financial need. And that's going to be a big component in determining what type of aid a student can receive. So, what types of aid are out there? Ones on the right are the good stuff, it's free money, and the ones on the left is self-help aid. So when we speak of scholarships, the main source of scholarships for students are academic-based. So when schools are going to look at high school GPA, and if the students took the test score, the SATs, ACTs, some schools will still look at that, whether they're test optional or not, to determine if the student is eligible for a merit-based scholarship. Other forms of scholarships that colleges and universities offer are talent-based. So if the student is an artist, a musician, an athlete, they may be able to receive additional funds on top of a merit-based scholarship. Some schools may combine it all into one. So each school does it a little differently, but most will look at the student's high school performance, either just academically or their talent added on. When we speak of grants, we're looking more at need-based funds. So after the academics are done, after the forms are done, is there anything else that the school can award you, or some other source of aid, other means of receiving aid in the form of a grant? Again, free money that does not have to be repaid. Now the next one's a little tricky. Work study or employment. Why is this considered financial aid? Through the federal work study program, which is a need-based program, so if the students working on campus, they're part of this work study program, they work in an academic office or administrative office, they get paid like any other employee, twice a month, every other week, whatever it might be. But what's blind to the student, 75% of their salary is actually being paid using government funds. The federal government gives schools pot of money to disperse as far as their work study programs, so students earn this money. But again, it's kind of cheap for the school, because we're only paying them 25 cents on the dollar, the rest of it's coming from government funds. And student loans. I'll get to those in a moment. Where does all this money come from? These are the 5 main sources of government, federal government aid and aid in general. First being the federal government. It's the largest source of financial aid. Every student who attends college in the states, if they want to receive financial aid, they have to fill out a form called the FAFSA, which I'll get into in good detail. It's provided primarily on financial need. It has to be filed every year, and each of the programs has their own requirements. So these are the 6 main forms of aid through the federal government. The first being the Pell Grant. When students and families complete the FAFSA, that SAI figure is determined, and also is determined whether or not students are eligible for a Pell Grant. There's no magic number of how much money a family can earn to determine if they're eligible for Pell. It's a long calculation they use. They take into account income, assets, household size, age of the parent, etc. So it's I can't say, okay, if you earn $150,000, yes, you're getting a Pell Grant. If you earn $151,000, no, you're not. We've seen a lot of changes this past year with the new formula the government put in place, where people who used to have no chance of getting a Pell Grant are getting Pell Grants. Not a large amount, but a small amount. Maximum award for the Pell Grant is $7,395. I believe it's expected to be the same next year as well. Next on the list, I'm just going to use the short version, SEOG. This is kind of like work study, where schools get a pot of money from the government to award to their Pell Grant recipients only. So if your child's not eligible for the federal Pell Grant, they're not going to have the SEOG award. It's again, to supplement to that, schools will use it to determine who's eligible for SEOG. They'll use different criteria, usually involving filing deadlines, a certain amount of need, and sometimes they even take into account academic standards of the student. Oops. Went too fast then, go back. Next is the Teach Grant. This is very different because not all schools participate in this program. This program is geared towards students who are looking to become educators and be future teachers. If the students are eligible for this award, they can receive up to $4,000 per year. Now, a lot of schools are hesitant to be part of this program because if the student doesn't meet the criteria of remaining an education major and going on to teach in a designated teaching shortage area, it turns into a loan. So make it free money right up front, but eventually it's going to need to be paid back if the child doesn't pursue their education career. They go on to change majors, or once they graduate, they decide, I'm going to teach for a year, but I want to teach in Eastchester instead of teaching in the Bronx. They don't have to pay this money back. Next is work study, which I spoke about, and now the infamous student loans. We've all heard about student loans. Some of us have our student loans. Some of us still pay back our student loans. For first-year students, they're eligible to receive from the federal government up to $5,500 in the direct student loan program. Now, that's divided into 2 parts, subsidized and unsubsidized. If the student demonstrates financial need after all the free money is awarded, they can receive up to $3,500 in the subsidized loan, meaning while the student's in school and the 6-month grace period upon completing their education, it is interest-free. So interest-free loan for basically 4.5 years. They continue right up to grad school. It stays interest-free until they go into repayment. So that's nice. An unsubsidized loan, interest starts accruing as soon as the loan is dispersed. Students can choose to pay it back while they're in school, although they're not required to. No payment is required until 6 months after the student finishes their education. So it's deferred that period of time. Interest is accruing. We always recommend students start paying it back while they're in school, the interest, while they're in school, just to save on the overall cost of the loan. Current rate this year is a little over 5%. Now, finally, the Direct Plus. Plus stands for Parent Loan for Undergraduate Students. So for the parents in the room, this is a loan you can take out through the federal government. They do a very simple credit check of looking at your 90-day credit history. Is it no delinquencies, no bankruptcies, no charge-offs? You can get the loan. You don't look at your debt. They don't look at your income. They don't look at your FICO score. They don't look to see if you're working. That's the good part. The loan has currently a 9% interest rate and a 4.25% origination fee. So if you're asking for $10,000, you're not getting $10,000, but you're paying back $10,000. It's a good last resort for those families who need to bridge the gap, who may not have other means to cover the cost. It's there as an option, may not be the best option. Next source of financial aid is New York State. I'm going to come to that at the end of the presentation. Finally, not finally, but next on the list is the colleges and universities. Private colleges and universities usually offer a significant amount of funds because they have to keep up with the state schools. in the form usually of either merit scholarships or need-based grants. So most schools will use the FAFSA information and possibly information from another form called the CSS profile. Some schools have their own work study and loan programs. Very few really do that much anymore, but there are a few out there. Each school sets their own deadlines. So, it goes from school to school. Nothing is consistent. So check the school's websites, what their deadlines are for filing both the FAFSA form, the CSS profile, as well as the admissions requirements. Next are private sources. This is aid that's available within the community. Are there any local organizations, Kiwanis clubs, Knights of Columbus, Lions Club, any of the religious organizations, churches, synagogues, etc.? Do they have any scholarships for their members or just the members of the community? Again, you may have to do a little legwork, search it out, find out if there is, how does the student go about applying for it? A lot of these scholarships become available right after the new year, roughly January, February. Also through the Navion system, they have scholarship searches there, and check with the guidance office to see anything scholarships within the community as well. These have deadlines, usually require some sort of essay or an application for the student to complete. You want to make sure if the student does need an essay that is written professionally, not in text format. They use full words, punctuation, capitalization, which I know as a parent of someone who just is no longer a teenager, how they write these days is a lot different than how a lot of us learned to write. And you can start researching this now. Even though you may not be able to apply, or the student may not be able to apply, see what's out there. Be prepared so when the applications open up, you have everything ready to go. And for parents of students who aren't seniors, again, start the research now, so next year, at this time, you'll be ready. Now, the final source we talk about are employers. You as parents, does your employer offer any benefit for your child's education? We mostly see this with parents who belong to any of the local unions. A lot of times they have something where the child is going to college. They may be able to offer $1,000 or $1,500 a semester. Sometimes it's right away. Often it's for the second year after the student proves themselves on the college level. We also see this from some corporations as well. So check with your company you work for, find out if they have anything in your benefits department. If a student's working and they're planning on continuing to work throughout college at the same place, they're going to stay local, see if they have any scholarship opportunities or education benefits that they could offer to the student. We've known families that have done this. They've worked for the ShopRites, the CVS's, etc., whatever it might be, and they worked throughout college, and they were able to help pay a little bit down on their college bill. So one of the things you could do right now, actually when you get home this weekend, is use something called the Federal Student Aid Estimator. This will generate an estimated SAI figure, so you kind of know what ballpark you'll be in when you have to start the process in a couple months. You're going to need information from your 2023 tax return. It's going to ask you adjusted gross income, how much you have in savings and checking, etc. And then it's going to ask you questions about your household size for both student and parent. It doesn't ask any academic questions. It kind of mirrors what's going to be on the FAFSA. It's available to use right now. I pretty much use it every day in my office when I speak to families to give them an idea. So it's a very useful tool, and it's pretty accurate from what we found in the product lab from last year. So I've mentioned the FAFSA a number of times. FAFSA stands for Free Application for Federal Student Aid. First word being free. There's no need to pay anybody to help you fill this form out or fill it out on your behalf or your child's behalf. The simplification that got put into place this year, although it had a rough and rocky start, the process is very simple. And what a lot of families dreaded about the form and had someone pay them to do for them is no longer part of the process. It's been removed. So there's no reason to have someone complete this on your behalf. It collects demographic and financial information for the student and the parent contributor. It's used to calculate the SAI to determine financial need. And currently it's available online in both English and Spanish, or will be available. Normally at this time of year I'd be saying, go home this weekend, file your FAFSA. However, due to last year's delay in getting everything rolled out due to the major changes they made, they're taking a better approach this year, where they're saying it's not going to be available to the general public until December 1st. However, right now there's a handful of students across the country working through certain organizations and colleges that are starting to file it. I think for 100 the first week, it's like 100 a week, through the month of October, then November they're going to open up like 1,000 a week for certain, populations, that to work out all the bugs. So come December 1, when you and your child are ready to complete the FAFSA, it'll be ready to go. So December 1 is the date you're going to be ready. So you can't file it yet. So now's the time you got to get everything in order. First thing you want to do is also check what the college deadline is for filing the FAFSA, their priority deadline. You really have the whole academic year to file it, but they have priority deadlines in place. This is something you should do as soon as possible, and those parents who already have something called an FSA ID from filing the FAFSA for a prior child, you do not need a new one. Parental FSA IDs are good for all of your children, but each student needs their own. This is their electronic sign-on to the federal government system. You get that sign-on, it's good for up to 20 years, so if you have one, forgot your password, you log in, you answer the security questions, they send you the text, the code, you move along. You're going to need your name, your address, date of birth, social security number, answer to the challenge questions, etc. Each person who requests an FSA ID needs their own email address and their own cell phone number. So you can't use the same one. For students creating an FSA ID, make sure they do not use their high school email address. So that will eventually expire. They want to use, if they don't have one, a Gmail, a Yahoo, whatever it might be. That's the address they should be using for the FSA ID. Again, it's needed by the student and the parents that are what they call as contributors to the FAFSA. I recommend all parents get the FSA ID. So what does the FAFSA look like? So when you go onto the studentaid.gov website, which is where everything is regarding federal aid is studentaid.gov, this is what it will look like, except the top will say 2025-26 FAFSA. You select that you want to start a new form. The student logs in, gets to this page, clicks new form, and then the process starts. You actually have the opportunity where you as a parent can file first before the student. It's not recommended. My personal recommendation is you sit down together at a computer, student does their portion, parent does their portion all at the same time, in one sitting, so you don't have to worry about missing out. Everything gets done rather quickly. So the student starts the process. It's going to ask who are the parent contributors to the FAFSA. The student has to provide the parent email address, the one that's used for the FSA ID, so when they complete their portion of the FAFSA, an invitation gets sent to the parent to complete their portion. One of the big things that makes the FAFSA much simple is this Future Act Direct Data Exchange. It transfers all federal tax information that's needed for the FAFSA directly from the IRS. Now, this was the part that scared a lot of parents, or parents didn't want to worry about making a mistake, so they paid their accountant to do it. They paid a processor to do it. No need for that. Because your tax information that gets transferred over, you're not even going to see the information. It's moved over automatically. If the student or parent doesn't consent to the FTI transfer, the FAFSA doesn't get processed. So it's either consent to do it or don't file a FAFSA. They're pretty much the two options. Again, it eliminates manual entry except for a couple fields that you may have to update. A paper FAFSA can still be filed. However, just as a note, these became available for the current academic year last February. So February 2024 became available. Some of them are still not processed by the federal government. So do not do a paper FAFSA. Make sure you do it electronically. Unless it's really, for some reason, you can't do it for whatever reason, avoid doing the paper FAFSA. So what's needed? For the student, this is going to be the same for the parent as well. Identity and contact information, consent for the FTI, they can say yes. The student's marital status, again, hopefully, imagine most of them are going to be single. Their college plans. And this is a question that trips people up sometimes. Students like, oh, I'm graduating high school, I'm a graduate student. No. The answer is going to be first bachelor's or first associate's degree. That's the answer the student will choose. And then, if they have any personal or unusual circumstances, which I'll get to in a moment. What those determine is whether or not the student is still dependent upon a parent. Now, for federal aid purposes, students are considered dependent upon their parent until the age of 24. For New York State, it's 35, but that's another story. So, if the student's under 24, we're all legal guardians of our own child. But if the student has an unusual circumstance where they're under a court-appointed legal guardianship, or they're a ward of the court, parents are deceased, they're homeless, they may be considered independent of their parent or parents. So that's an unusual circumstance. In the past, it would stop them from filing the FAFSA, it would cause a lot of problems. With this new FAFSA, the student can answer questions as they're in that situation, in an unusual circumstance, and the FAFSA will be provisionally independent process. What will happen then is, school will get that record, and the schools will reach out to the student to prove that what they said on the FAFSA is accurate. So we do follow up in those situations. Once they complete that portion, invitation gets sent for the parent, then the parent's information to be sent through the invitation, and then the student starts entering a few bits of information. Again, very little bit, takes a couple minutes. They pretty much confirm their demographic information, so that carries over when they log in. They confirm their citizenship status. The FAFSA can be filed by any U.S. citizen or eligible non-citizen, which means anyone who has an alien registration number and certain cases of asylum. When you get to that question on the FAFSA, if you're unsure, there's an info button. If you meet one of the requirements, you can proceed. If you do have an alien registration number, that has to be entered into the FAFSA. It asks the parent's educational status for statistical purposes only. The government collects each year how many first-generation students are going to college. And colleges use this also, because if the student is a first-generation college attendee, that student may need some extra guidance in the process because their parents haven't gone through it. So they kind of help them along. They provide different sessions during accepted student days, orientation. They'll say, okay, you're a first-generation student. Now, what extra help do you need? A lot of schools are doing that now. If there's an unfortunate situation where the parent was killed in the line of duty, either military, police, fire, the federal government will award the student a full Pell Grant regardless of any of the income information. So that's the reason that question is asked there. Again, proof is usually required to the school in this situation. And it's going to ask the name of the high school the student attended. They put in the state of New York, they put in the city of Eastchester, and it should pop up Eastchester High School. They click check and move along. The financial information provided for the student that student needs to provide is minimal. If they file taxes, the information will be carried over using that FTI process. If they didn't file taxes, that information gets carried over also. IRS will say, there's no tax return on file for this student. And that's perfectly acceptable. A lot of times students don't file taxes. But again, that's not something students have to answer the question and be confused about, thinking, wait, should I file taxes, should I not? It doesn't make a difference. They just answer that question. And then assets, which I'll talk about when I get to the parent section. Now the final part is the fun part for the student. They get to list all the colleges they want this information to be sent to. Students can list up to 20 colleges on the FAFSA. After the child's looking at more than 20 colleges, they're going to have to juggle a little bit. So once the FAFSA is processed, they have to assure that certain schools, like a certain number of schools, have received their copy of the FAFSA. Then you have to go back in, make a correction by removing schools and adding the additional ones. So kind of juggle and make sure who's filed. We're hoping by the December 1st delay, some of the schools that your child's applying to may drop off their list, so get them under 20, so they don't have to do that, but we'll see what happens. They review the information, type in their name as their signature, and move along. So your part, where you get the invitation in your email saying, congratulations, your students completed their FAFSA, now it's your turn. The reason I want you to do this with your student is because when you get that email, it may go into spam. So, and if your child does it, are they going to tell you they did it? Or are they going to forget about it, go somewhere and say, 2 days later, oh yeah, by the way, I did my FAFSA. And if you didn't check your email, you won't know that. So, I know teenagers all too well. To do it together, you kind of avoid that confusion. You log into the FAFSA using your FSA ID and complete your sections. Again, this is the same information for the student. Identity, contact information, consent, state of legal residence, and marital status. And this is where it gets a little tricky. It could get a little tricky. Ask for the marital status because the FAFSA pulls in tax information from your 2023 tax return. Now, if the parents are married, living together, and filing jointly, simple. One parent logs in, draws the information in, they put the second parent's name and social security number in just for confirmation purposes. That parent doesn't do anything else. So that's a simple process. If the parents are married, living together, but file taxes separately, each parent has to go in separate to the FAFSA and enter their information. So the FAFSA has the student and one parent contributor. In some cases, a second parent contributor needs to be. So if the parents are separated, if the parents are living together but filing taxes separate, both parents have to go into the FAFSA separately to do the work. Now, if the parents are separated, there's a series of questions that they're going to ask you. Okay, parents are separated. Who provides more financial support for that student? It doesn't have to be the parent that the student lives with. It could be the other parent. If that other parent is remarried, how do they file taxes? If they file jointly, again, it's easy enough. If they don't file jointly with their new spouse, then the contributors to the FAFSA will be the student, the parent, and the step-parent. They all have to go in. So the FAFSA looks at household income for the parent household contributor that the student is using. So if that's the case, you determine who is the parent. The government just put out a new website to help parents determining this if you are in a separated situation of which parent should contribute to the FAFSA. I'll share it with the guidance office. Again, we just got the information earlier this week on that, so I want to test it out before I share it. But it looks, from quick things we saw, it looks pretty good, so we can have that information. So, as a parent, what information are you entering? If you receive any federal benefits from the federal government, SNAP, WIC, anything along those lines, it's a yes or no question. They don't ask how much you received, just whether or not you received it in the past 2 years. It's going to ask tax filing status, because again, this will determine how many contributors to the FAFSA there will be, whether it's just a 1 or a 2. It's going to ask about family size and number in college. Number in college has no bearing on anything. It's a question that's on there, but doesn't carry any weight anymore. It used to. Now, the family size question, it's going to carry over information from your tax return, the number of exemptions on your tax return. That could be different from the number in your household. So this is one of the items that you can change. The only 2 items you really have to do tax information you have to deal with. This is one of them. But if it's the same, if there's 2 parents, 2 children, exemptions of 4, you're good, no changes. But who else is in the household? Is your parents in the household that you're taking care of? Is your sibling in the household, your niece, your nephew, a friend of the family? If you provide at least 50% support for anybody, you don't claim them on your taxes, you'll have to update this figure. You have another child that came back from college that's living with you, they may file their own taxes, but you're still supporting them, you'd have to update this figure. Other tax information will get all carried over. The other question you might have to update or change is one of the bits of information that's carried over from the tax return is if you took any withdrawal from an IRA or retirement account untaxed, that's what's reported on the FAFSA. Now, if that untaxed portion was a rollover, it doesn't pick up the rollover. So the question is, I'll say, you reported, the tax return has a withdrawal from an IRA or retirement account. How much of this was a withdrawal, and you have to manually enter that figure. If you don't enter it, you make a mistake, you forget, you miss it, you can't go back and correct that. That correction has to be done by the school that your child's attending. They have to go in and enter the information after you provide the school proof of the rollover. So if you did in 2023, look at the tax returns. I forgot which lines are on this year. It should be 16, 17, I can't remember, but if there's a rollover there, that information is going to have to manually be updated into the FAFSA. Now, assets. What is an asset for the FAFSA purposes? So if you did the financial aid estimate we talked about earlier, when it gets to the asset question, there's a little click, what is an asset? And that's exactly what I have here. So assets include, this is the same for the parent and the student, this part, any money in cash, savings, and checking, as of the time you file with FAFSA. Now, you get paid on the 30th of the month, FAFSA becomes available December 1st, and your mortgage gets paid on December 2nd. You got to report what's in there after you pay your bills. So it's really not necessarily as of the day you file the FAFSA, it's what's normally in your checking account, savings account, cash on hand, after your monthly bills are paid, and you cannot report less than 0. 0 as low as you can go. So money, cash, savings, checking. If you own a business, It's the value of the business minus any debt you have on there. Now, we asked the question, how does someone determine the value of their business? Answer we got is, if you were to sell your business today, what would you sell it for? That's the value of your business. When they talk about the debt you have on the business, it's debt you have on the physical property of the business, the mortgage on the building, how much you have to pay for equipment, etc. You know, if someone owes you $2,000, they haven't paid you yet, that's not a debt on your business. It's a physical debt. Same if you have an investment farm. I'm not sure if there's too many investment farms in East Chester, but you may have one upstate. If you own real estate other than your primary residence, that needs to be reported. Again, the value of that minus any debt. So the vacation home, the investment property you may have, any of that gets reported as an asset. Then the common assets such as stocks, bonds, certificates of deposit, etc. 529 plans. If you have a 529 plan, the only one that gets reported on the FAFSA is for the student who's filing the FAFSA. So if you have 3 children with 529 plans, you're only reporting one 529 plan. And it goes under the parent's name, regardless of who the 529 plan's name is in. If it's in the child's name, it still gets reported as a parent asset. Now, if that 529 plan is held outside of your household by an aunt, an uncle, a grandparent, whoever it might be, it does not get reported. So that's the best way to do it. So you have a month to move. So that's what gets reported. What doesn't get reported? You do not report the value of the home you live in. Only any investment properties or vacation homes. So the home you live in, regardless of what it's worth, does not get reported on the FAFSA. You also do not report any UGMAs or UTMA accounts that the student is the custodian, but not the owner. So if student's a custodian on a UGMA account, does not get reported. You do not report the value of your life insurance policy. And most importantly, you do not report the value of your retirement plan, your 401k, 403b, etc. That's your money for retirement. It has nothing to do with your child's education, so that it does not get reported. So that's kind of the good news of it. So the money that's meant for you, life insurance, and your retirement, does not get reported on the FAFSA. And I get to the CSS profile later, we have different answers. And then other parent information. This is where if a second parent needs to provide information, they'll be notified. They'll get this information. Congratulations, balloons flying, things going up in the air. You review your information, type in your name, sign it. The FAFSA is done. In all honesty, last year, even after all the problems we went through, I sat with students at different high schools and their families to complete the FAFSA. Some of them got done, student and parent, in 15 minutes. Some of them had difficulties because of, whatever it might be. Some had language barriers. The Spanish version wasn't working right, so we had to switch to English and do conversions. It took a little bit longer. But if you have your FSA ID, you have all the information you need, you can actually be done with this process very quickly. So, other considerations, just the consent to file the FTI, just as a reminder, it should be for all contributors, so the student, parent, if there's a step parent. As I mentioned earlier, you could actually do your portion before the student does their portion. It's not recommended. So of course, last year when I was doing my daughter's FAFSA, I did my portion first, just to see if it worked, and it did. But again, it's not the recommended way of doing things. So if someone's going to break the system, I might as well. Talked about this before, who's included in the family size, the student, the parent, the parents, any dependent children, and then anyone else you provide 50% support for that's not claimed on the tax return. All said and done, student goes back onto the student aid dashboard and sees that the FAFSA submission summary, all that comes up. That little number on the right, the data release number, it's something that's not really used. The only time you may need to use it, or your student may need to use it, if they did apply to more than 20 colleges, and that 21st or 22nd college wants to get things moving along. If you give them that number, they can access the student's FAFSA information, but they can't produce an actual financial aid award notice because they don't have the physical FAFSA yet. So it's a temporary thing that they can look at to kind of give you an estimate. So again, I have the ability to print this out, print out all the information, but as most people probably do, just save it as a PDF instead of wasting paper and ink. corrections need to be made, or you have to add colleges in, go back onto studentaid.gov. Instead of start a new form, you do update existing form and collect the information. The one correction said the rollover information, that has to be done by a college financial aid office. So that's something you won't be able to do. Now, we spoke about unusual circumstances before, which is the student's dependency status. Special circumstances is life. What's happened since you filed your 2023 tax return. So the FAFSA doesn't give you anywhere to explain anything. So if there is a special circumstance that's taking part in your life since you filed your tax return, you'd have to send the school a letter explaining the situation. Do not send documentation. Just a letter of explanation. The school will then say, okay, we got your information, here's how we're going to proceed. And that could be, in order to make any adjustments, please provide the following documents to us. And they'll see if they can do anything. Another school, you may send the same exact letter and say, thank you for submitting this. Unfortunately, we're not going to pursue any special circumstance review. We're going to use the data provided on the FAFSA as is. And each school has the right to do that. The only requirement colleges and universities have regarding the FAFSA is we have to allow you to submit that special circumstance letter and review it. We don't have to say we're going to do anything about it. Most schools do review special circumstances for some of these items. The main ones being, obviously if there's unfortunate death of a parent, all schools will then make the necessary adjustments. They'll need documentation, of course, but they will work with the families. And the other one that's kind of a given is if a parent loses a job. So if you filed your 2023 taxes, but you got laid off in the beginning of 2024, schools will work with you to see if they can make any adjustments on the FAFSA on your behalf. Documentation, proof of unemployment, severance, etc. They're going to ask for proof of everything. Some schools will also look at it if you had a loss of income, where if you were making a significant salary and now you lost your job, you started working again but making significantly less. This is one of the ones that is really tricky from school to school, because some schools will say, yes, we'll make that adjustment. Other schools will say, well, you're still working, you're making less money. That will be reflected in next year's FAFSA. So we'll take care of it at that point. Right now, we'll use as is. So each school, that's one that's definitely different from school to school. If you have any medical costs that are not covered by insurance, this is again, any of these situations is going to require a lot of documentation back and forth with the school. You have to provide proof of payment, not explanation of benefits, proof of actual payment to the medical facility, the bills from the doctor's office, etc., to see if they can do anything. Again, this is after insurance. If you have dependent care, so if you have a child that needs extra care for any reason, whether in a special school, special education purposes, some schools will look at that and say, yes, we can help you with that, but as long as you provide us proof, we can make some adjustments. If you have a parent that's living in an assisted living facility or needs care in your home that you are paying for, not that they're paying for, that you are paying for, schools can look at that as well. If you have a child that's not in public schools and paying tuition, again, some of the schools will say, yes, we can take that into consideration. Again, this is 50-50. Some schools will say, that's your choice. You don't have to send your child to a private school. That's different than the extraordinary dependent care situation. Additional family members in college, this gets a little tricky because the old FAFSA a couple of years ago, it took this into consideration. It no longer does. Most schools are not considering additional members of college family members in college for a special circumstance, unless it's a drastic situation where you're a parent of quadruplets. Some schools may take that into consideration. Or you have 4 kids in school at the same time, they may take that. But if you have just 2, usually not. But it doesn't hurt to ask the question. The final one is divorce. This really should say more separation than divorce. Divorce is a legal document. So it's pretty not clean, but you have the divorce decree. You see, okay, parents are separated since they filed taxes, they're divorced. Okay, we need the following information to back out whichever parent is not considered a contributor. Now, if it's a separation that's not at a divorce status yet, this is where it gets tricky, because what is considered a separation? And each school has different requirements for that. Usually, the minimum is proving that you're in separate residence. which means separate utility bills, separate mortgage payments, separate rent payments, paychecks going to different addresses, etc. We often hear, we're separated, but we're still living in the same house. Well, for FAFSA purposes, you're not separated. You file taxes jointly, you live in the same house, doesn't matter what your arrangement is, you are considered not separated. So, but if it is an unfortunate situation that you're going through, schools will work with you, but they're going to ask for a lot of information. Some of it may get personal, so just bear with them. Because again, any adjustments we make to the FAFSA, we get audited by the federal government, so we have to have the backup on hand. So I preached through New York State before, I skipped over it. So New York State, as New York State residents, students and parents who live in New York State for at least 1 year are eligible to apply for aid from New York State. Students must attend a school within New York State. It could be public or private. And each of the programs have different eligibility. We talk about 4 main programs with New York State. There are others besides these 4. And the handout, the website for New York State Higher Education is provided for certain other situations. So TAP is the biggest program. When I was in college many, many decades ago, I received a TAP award. It's been around a long time. Student must file a FAFSA. It's for undergraduate students only, either part-time or full-time. The maximum award is $5,665. The minimum award this year was increased to $1,000. It used to be $500, they upped it to $1,000. New York State also increased the income level. It used to be any parent who made more than $80,000 New York State net taxable income would not be eligible for a TAP. They raised that to $125,000. So more families receiving TAP this year, the amount they're receiving on the low end has been higher. So if you meet these requirements, this is family income, the student would complete the New York State aid application, which is separate from the FAFSA. The information from the FAFSA should get fed to New York State, but then the student has to go in and complete the rest of the information. This form will take longer than the FAFSA to complete, because it's more manual. The other awards from New York State, the first one being the Excelsior Scholarship. This is if the parents make less, or the family makes less than $125,000 again, students can receive full tuition at a SUNY or CUNY school. Tuition only, not fees, not housing, not food, just tuition. In order to maintain this award, the student has to complete a minimum of 30 credits per academic year, so roughly 15 credits per semester. If they don't do that, they don't receive the award in subsequent years. They can catch up and then receive it in the 3rd year, but it's a lot of work on the student. The other part of this is upon completing their degree, for every year the students receive the Excelsior Scholarship, this actually goes for all 3, the student must live and work in New York State for the same number of years they receive the award. So if they were lucky enough to receive it for 4 years, if they don't live and work in New York State for 4 years after graduating college, they must pay this back to New York State in the form of an interest-free loan. So again, we're pretty close to the Connecticut border here, so child comes back to school, they want that job in Stanford, you know what, they may not take it because they'll have to pay this back to New York State. They may have to come back and live at home for another 4 years and work at a less paying job in New York State, just so they don't have to pay this back. So it is a great benefit, but be aware on the back end, especially since we're so close to another state where a lot of students do cross the border, to work. It's something to take into account. Now, the Enhanced Tuition Award is meant for the private college universities in New York. Kind of like the Teach Grant, schools have to opt into this program, and very few do. In the beginning, it was like, I think about 35% did, but as this program has progressed over the years, most schools are starting to back out because of the benefit it's not beneficial to the student or the school. The maximum award a student can receive through the ETA program is $6,000 total from New York State. So if they're getting a TAP award of $3,000, they're not getting another $6,000 on top of that, they're getting another $3,000. Most of the students who we had that received this award were getting less than $1,000. It costs more to run the program at colleges, to administer it, go through all the paperwork, and keep the academic records, etc., than to award that $300 or $400 to the student, or $1,000 to the student. A lot of colleges just say, if you would qualify for the ETA, it's easier for us just to give you a grant from our school, as opposed to having to deal with all the administrative backlog with New York State and getting all the paperwork done. So a lot of schools have backed out. But if your child is applying to a private college in New York State, ask if they, if they do participate in ETA. These forms come out usually in January. Now the final one listed here is the New York STEM Award. This is not a financial-based award. This is strictly academic. If the student is going to attend a SUNY or CUNY school and be in the STEM major, science, technology, engineering, or mathematics, they finish in the top 10% of the class, they can get free tuition. All the other requirements is the other awards that are in place too, the academic requirement, the living and working. Now, I'm not sure if you do rankings here. If you don't do rankings, New York State does work with your counseling department to determine if the student meets the qualifications. But again, it's SUNY and CUNY only and tuition only. The final form I'm going to talk about tonight is the CSS profile. I've been lucky enough in my 20-odd years of working in a financial aid office never to have worked at a school that needed the profile. So give you a little bit of a caveat there. It's an additional form used by more of the highly threatened schools to determine a truer financial picture than what the FAFSA provides. It's administered through the College Board, so if your students took the SATs, the SATs, they'd have a College Board account already. To determine what schools require it, if you go on the College Board website, they have a great search engine on a list of all the colleges. You can list alphabetically, and if they require the profile. One of the questions they also have listed on that list is whether or not the school looks at the non-custodial parent information. So if you are in that situation where you're separated or divorced, and you're the contributing parent, there's a good chance the profile is going to need information from the other biological parent, not just yourself. It's also going to look at the value of the home you live in. It's going to ask the value of your automobiles minus any debt you have on them. So it looks at a truer financial picture. It asks about debt as well. So it is a more detailed form than the FAFSA. It will take you much longer. I did this presentation the other night at a high school, and one of the parents said it was horrible filling this form out. Because again, it asks a lot of personal information, a lot of financial information. It does have a fee involved. It's $25 to file the form, $10 for each additional one. So $25 is for the first school. If more than one school needs it, it's $10 to be sent. Most schools have waivers that usually are tied into the free lunch program. Check with the schools your children are applying to. Check the College Board website if it's required. This form is now available. It did open up last week on October 1st. So you can start filling this out. Schools have deadlines as early as November 1st. So even though you may still be applying to the school, your child may still be doing the application, this form may need to be in very soon. So check with those schools to find out if it's required. Again, it is more in-depth with the information that is necessary. So in just about 45 minutes, I gave you a ton of information. And I know I probably didn't answer all your questions, so I am able to stick around for a little while, answer any questions generally, and for a little while after, so please start raising your hands. I won't pick on anybody, don't worry. Yes.
Students' retirement accounts, do they count towards money that the student has for financial aid purposes?
What type of account is that?
A retirement account. For the students.
So the parent is retired, they have an account set up for the student, or?
If the student works and then starts a retirement.
Okay, so yes, any retirement account for the student or parent is not counted.
Thank you.
So that's money for their future. So the only thing in student assets would be their cash savings checking, or if they have standard investments. Yes?
Does the CSS system talk to the FAFSA system in any way?
The CSS profile does not talk to the FAFSA in any way. However, kind of interesting, to clear up the FAFSA problems this year, they brought in staff from the College Board to get the FAFSA up and running. But they are independent, completely independent of each other. Yes?
With FAFSA, for merit-based scholarships and things like that, are you still filling out FAFSA, and that's what the institutions are looking at?
The question regarding is the FAFSA is needed for merit-based scholarships. Usually not, however, some colleges will require the FAFSA for all students. If they're going to offer you any money, whether it's merit-based, need-based, they will require the FAFSA. Not all schools do. And my school, you don't have to file a FAFSA to get a merit-based scholarship. I'd like to think that all schools only look at the student's actual merit. However, that's not the case. some schools will look at the finances of the family before they offer the student anything. That's more the admission side of things, but it's not something I agree with. Yes?
So, do they remind you each, you have to fill out a new FAFSA each year?
Yes, the FAFSA gets filed each year, so once it's available, you'll usually get about maybe 2 weeks before it's available, the student and the parent contributor that was listed will get emails, start getting emails from the Department of Education. Most likely the school your child attends will also be sending them emails, letting them know you have to file your FAFSA, you have to do your renewal, up until the point they file. The federal government will send 2 or 3 until it's filed. I'm trying to think this year, for his first year of college, the second year, I got about 3 reminders that need to be filed, even after I filed it from the federal government. But the school will send out reminders usually until it's actually filed. So the school's usually more diligent about it than the government. But again, you kind of put it on your calendar for October 1st next year. Hopefully it'll be available then, and you get it done as soon as possible. Yes?
Well, my parents, like the grandparents of mine, have a uniform gift account for my daughter, and so the money in there does not count.
Correct. That being it's in the grandparent's name primarily, although it's meant for your daughter, it does not get counted as an asset.
Okay, so but it does have her social security number.
That's fine.
That's
Yeah, exactly. Because the FAFSA doesn't, they don't investigate. It is an honor system for the most part. And most colleges, universities, unless they see something that really looks out of whack, they're not going to, ask for too much follow-up. Certain FAFSAs do get selected for a process called verification, where the school has to collect some tax data or personal data, but it's very few. It used to be a lot more, but it's very few because of the new FTI transfer. Yes?
So, the 529 plan, I have one for my daughter. I have to include that, but if her grandparents have it for her, it doesn't get included.
Correct. If the 529 is in the name of the student that's on the FAFSA, and their parent, that's the only one that gets reported on the FAFSA under the parent's asset section, not the student's asset section. And if it's held outside, so if the grandparents hold it, has a 529 for your child, that does not get reported. It's just the one that's held by the student and parent. What was that? Other questions? So you have a couple weeks to get ready. Your goal is to get that FSA ID done before, definitely do it like at least a week before December 1st. You don't want to try doing it as you do the FAFSA. It'll delay the process. Get the FSA ID for the student and parent as soon as possible, and then you should be all set come December 1. All right, one more question. Yes. Yes. Every student needs their own ID, and the parent needs their own as well. Again, if you have one previously, it's still good. Okay. Second. Yes. Question about the FSA ID. If you've had one that's maybe more than 20 years old, you may need to create a new one. What I would do, try logging in if you remember what it is. If not, when you go to create a new one, it may say you have one already. And then you put in forgot password, forgot username, and they'll send you the information to reset it. So if you did this while you were in college, there's a chance that you may still have an active one that you're not aware of. Thank you for coming out tonight. I said I'll stick around for a few minutes. If you have any questions.